Is Bitcoin about to break or boom? Trump's new tariffs might be the trigger no one saw coming. When the Trump administration unveiled its latest tariff strategy on what's now called Liberation Day, many feared it would rattle the broader economy and the crypto market with it. But some analysts argue there's still reason for optimism. On March 26, 2025, President Donald Trump signed an executive order in the Oval Office, announcing a 25% tariff on all foreign-made automobiles. The move sent shockwaves through global manufacturing and trade sectors, and its effects quickly rippled across financial markets, including crypto. Since then, Bitcoin has seen a notable decline, contrary to investor expectations. Economic uncertainty and the impact of these new tariffs pushed investors toward traditional safe haven assets like gold, which directly impacted demand for digital assets. Still, some believe this situation may play to Bitcoin's long-term advantage. Analysts suggest that the tariffs could ultimately weaken the dominance of the US dollar, indirectly boosting Bitcoin's appeal over time. While short-term price action has disappointed, many had expected regulatory reform and government-level Bitcoin strategies to drive growth. So far, the opposite has occurred. Earlier this year, Bitcoin surged past $100,000, but by March, prices had pulled back to around $85,000. Macroeconomic pressures have dragged the crypto market down, especially as correlations between Bitcoin and traditional assets, like stocks and bonds, become stronger. And these assets have been hit hard by the global uncertainty, much of it stemming from US trade policy. Tariffs, essentially extra fees on imported goods, have raised fears on Wall Street of a possible global economic slowdown. In such a climate, risk-averse investors have begun retreating from digital assets, which are still considered riskier than gold or government bonds. Mark Ostwald, chief economist and global strategist at ADM Investor Services, said, "It all comes down to risk appetite, and right now, it's deteriorating. That's temporarily widening the gap between crypto and gold remains the favored safe haven." He also noted that this shift is being driven largely by central bank reserve managers seeking to reduce their dependency on the US dollar, a long-standing concern. As global financial systems become more fragmented, investors are searching for low-risk alternatives to the dollar. Right now, that still means gold, which has already jumped 18% year-to-date. However, that could change, according to Omid Malikan, adjunct professor at Columbia Business School and author of The Story of the Blockchain. He believes Bitcoin could soon emerge as the new gold. "I think the entire future is uncertain, and in some ways, even unpredictable," Malikan says. "There are so many overlapping variables. Both crypto and tariffs are still relatively new territory. Some believe crypto is just a tech-based risk asset that will be sold off under tariff pressure, but others see Bitcoin as digital gold. And if physical gold is rallying due to tariffs, what does that mean for Bitcoin?" In other words, rising economic instability could lead more investors to seek shelter in Bitcoin, just as they've done with gold in recent months. Another positive sign? Analysts believe the worst of the tariff impact might already be priced in. According to Zach Pandal, head of research at Grayscale, the pain may be temporary. Trump is expected to formally announce the full scope of the tariff package on Wednesday, April 2nd, at p.m. ET, dubbed Liberation Day. The plan reportedly includes retaliatory tariffs against 15 countries that have imposed trade restrictions on the US, including China, Canada, and Mexico. Pandal estimates the current tariffs have already shaved 2% off US economic growth this year. However, he believes a phased or measured announcement could ease market tension. If Wednesday brings a hardline rollout, but in stages targeting the 15 countries they've identified, I expect markets to rebound, Pandal told CoinDesk. Once that's out of the way, crypto markets can refocus on fundamentals, which remain incredibly strong, he added. Pandal pointed out that promising developments like Circle's potential IPO would not be happening if institutions lacked confidence in the digital asset space and its regulatory future. As a former macroeconomist at Goldman Sachs, Pandal also believes tariffs could drive increased demand for non-dollar-based assets. I think these tariffs will undermine dollar dominance, making room for competitors like Bitcoin. Prices may dip in the short term, but the early months of the Trump administration have only strengthened my long-term conviction that Bitcoin is a global monetary asset. Despite the market's current pessimism, Pandal still expects Bitcoin to reach new all-time highs this year. If I didn't believe Bitcoin would win in the long run, I wouldn't have left Wall Street, he concluded. This content is for informational purposes only and does not constitute financial or investment advice. Always do your own research before making any financial decisions.